Thanks, guys. Okay, so just starting with a question that's come in about the swap rates. Easiest way to see the swap rates is if you come into your market watch list on the left hand side here. If you right click, you'll get this menu. On that menu, you select symbols, and then you'll need to find which symbol you're looking for. So this one, and the question here is on the European versus the Polish currency. Um, And if you then select that one and click on properties, it will tell you what your swap rate is. So this is in points, which means this is basically 1.05 pips or 10 points, but 1.05 pips is your swap rate per day based on the face value. So if your contract size is 100,000, then it's basically $10 a day. Um, so what the swap rate you also need to be aware of is that it's valued in the secondary currency. So in the Polish zloty, you're paying that in the Polish zloty, so it's got to then convert back to the Aussie. So this particular email was suggesting that the rate when he took the trade on the 10th um, overnight was zero. That's probably because you got into the trade on that day after the rate is applied, and the rate's applied at 5 p.m. New York time, which is currently 7 a.m. our time, and that'll change in a couple of weeks. That's another matter. And then it goes to $1.77. Then it goes to $22. And we can see that the value is changing constantly. This is obviously the value of the euro versus the zloty, but the zloty's jumped up in value here, and you'd have to look at what the Aussie's doing at the same time, and I think it's just shitting itself. So you've got the Aussie decreasing in value, and they've got the zloty increasing in value. So that spread between the Australian and the zloty would be getting wider, and therefore the expense of your swap would be increasing. And then it's stabilised here over the weekend because it doesn't move over the weekend. And then it seems to be increasing in value. The swap rate has gone from $25 over the weekend to $28, $31, and now $53. So, but we can see that on this particular day here, the zloty increased in value, and the reason why it's decreasing in value in here, well, it is against the or is increasing against the euro there. It's what the Aussie's doing at that time, which is, as we can see, the Aussie is on the daily chart has been crapping itself. So that's why the rate would be different on the, each day. Does that make sense? So if you're unsure of what the rate is, or if you should get in a rate, you just right click on your market watch list, go into the symbols and see, well, how much am I actually going to be paying if I if I think I'm going to be having this trade on for a while. You can see that it's the swap here is 3 pips spread for the euro versus the ruble, and if you compare that to something that's not so exotic like the Aussie dollar, you're looking at 0.4 of a pip. Yeah. So the majors are obviously going to be cheaper to trade than the exotics in terms of the swap rate. And the swap rate is not only it's not only about the volatility or how much is traded in that particular currency pair, but it's very much so indicative of the interest rates of the particular currency. So the Aussies are currently 2.5. And I'm not sure what Poland is, but let's look at it in terms of the European rate, which is the Sweet FA. So that's the things that'll be you need to take into consideration. Okay, so that's the swap rates. You might see here that the Aussie dollar, I've got this set up. I'm looking at the hourly chart here to trade the Aussie on an hourly. If we look at the daily there, but if we look at the 4 hour or even the hourly, we can see that 90 was a bit of support, and a nice round number of 90. It's broken, it bounced off that support, broke through over the over the FOMC. It's come back up here and tested it a couple of times on the hourly. So I'm just trying to, there's a 30 pip risk. The stops are just above 90 there, and I'm looking at running that for 60 to 90 pips target, so risk is 3 to 1. Not only is that nice round numbers there, but if we do a fib from that, we've got the 50 fib coming in there as well. So I think that's a reasonable setup with the Aussie. Taking that short, it's under a lot of pressure, and I think could probably continue to be so. So we then come to a question from the Euro Aussie. It had set up for us to look to go short. The question is, should I be leaving my order in there? My suggestion would be no. If your order is here underneath this swing high, the market's trending higher as the Aussie weakens and the Euro sort of stabilizes. I would not be leaving my order there. You might get another setup where you could be looking at a different level. So I'd be taking my order out and reassessing it when the next setup appears. If another setup appears, it might. If the Aussie continues to weaken and the Euro stabilises, then this will continue to rally. I can't see that happening in the long run, but we need to be prepared for what we're seeing, and what we're seeing is that the market's rallying, so we should cancel our orders. Okay, and we come to get rid of that, and get rid of that, and we look at the. Oh, what's that? I'll take that back to the alley. Go, keep going. All right, dollar rand. We have a question on that. Trend long trend continuation. Breakout above and retested at the top of the range. Yep. Checklist. Higher highs above the moving averages. Horizontal support. Bullish price action. Fib retracement support. Yeah, this is I agree with you. Having these questions, and that's should we be looking at that with those kind of questions that are there? On this retest I like that kind of price action when it comes back and retests a level. You said it's a Fibonacci level. As well. Well, yes, it's the 50 off this move that we can see here. I would agree with that. The thing what I would be suggesting with this is that yes, I like the fact that it's broken through and it's come back and retested it. This was earlier in the week, but it would have been on the shorter time frame, such as this 4 hour, that I would have been looking at that coming in. So something like this with the we see the market starting to take off again, and we go, okay, well, let's go with it. And you're looking at, say, a 90 pip stop, and therefore a 180 pip target, at least 180 pip target, which is feasible when the momentum at that time was down here. Now the momentum is sort of in the 75s area, and as you've noted, you've got your extension zones on, and it's kind of in that area as well. Depending on where you put your extensions, but even if you had that one or you have this one, it's certainly in the area where you expect the market to perhaps pull up, and so the probability of getting in on this one here, on this ring low, taking that yesterday, and this email only came in this morning, but taking that yesterday, 180 pips, and then so you need to be looking at 360 pips. And that's this high here feasible, but the probability of it is a lot lower than taking something like the 4-hour as it bounces off the 50 EMA and off that support line, and getting 100 and what we were risking 80 pips, getting 180 pips out of it at this point in time is a higher probability than getting 360 pips out of this point in time. Does that make sense? So you are right to question the trade. It does look good. It is a nice retest, but what's your risk reward going to be on that? And are you going to get 360 pips out of it? You could potentially look at it and go, well, what's the ATR on it, and trade it that way. And say, well, the ATR on it is, well, that's 110 pips anyway. Wait up, is it still 110 pips? Well, yeah, so it's 100 pips. So if we're looking at, you can maybe do something like risk 100 pips and go for 200. That would, it's a higher probability of getting 200 pips than it is of getting 360. Yeah, cool. What's the next one is dollar China, dollar yuan, sorry, or renminbi, however you want, whichever one you want. Short trend checklist: lower highs, lower lows. Look, my immediate reaction to this one is, look at the size of all these bars, and then you get the size of these bars. So it means your stop's going to be almost like a month's worth of trading in normal conditions. This was news, and this was more news. So news tends to inflate the bars out of proportion to what you can reasonably expect. It is underneath this 615 again, which is great. But your risk reward on this, you're looking at 1 to 2. Yeah, but to get that way down there, in terms of, okay, I'm going to risk this. That's 417 pips, apparently. Let's call it 42. You're looking at 80 something. It's going to take forever to get down there. A bit of a support level down at at 610, 609, which is basically 1 to 1. So that's my concern. I mean, the setup looks good. It's all there. They're trying to weaken their currency, add stimulus, and that's why the market bounced. Did get to the 50. There is that support level resistance at 615. You could even say that there's potentially it's sort of come off this soft resistance line, which is maybe not that soft. So yes, your setup's right. It's just I don't know if the getting that risk reward, that's convergence. That's divergence across here. What you do have is hidden divergence. Can you see this high here when the price was there, compared to this high here when the price was there? That's hidden, bearish hidden divergence. Let's see that across there. Yeah, it's bearish hidden divergence. But it's just, if you could decrease your stop instead of having it at 420 pips, that'd be the ideal situation. And by doing that again, it's looking at it in the shorter time frames, trying to decrease it that way, or use an ATR style stop to get a better risk reward ratio, because I just don't know. You see how long it took to fall from 6.2 to 6.13, so effectively 700 pips, and you're looking for 800 pips. if that's your risk. Yeah. The 18th, which must be that bar there instead of that one, is it? It's the 16th. Yeah. Okay. So that's one way of doing it is going well. So obviously some sort of level there that it's broken under and retested, and have you stop underneath that, so you are now getting a better risk reward ratio. That's good. Good thinking. Your stop loss is above that, it's higher. Yeah. Cool. I like the way you're thinking. So yeah, well done. And from yesterday, Aussie Kiwi waiting for it to make a. This bar ended on its close and it closed down here. I went in for an aggressive entry on this and just got taken out this morning. Maybe next week there might be another opportunity. We'll see after their election tomorrow. They might be more pliable to have a weaker currency. Not to be outdone, but yeah, it's better man than me by waiting. Whereas I went in off this engulfing bar, bullish engulfing bar, but being a little more patient, wouldn't have seen me lost that trade. However, I still believe that it's going higher. We just need to see the buying coming into it, and I dare say that will happen over the weekend. But this is all good. Cool. This is good. Okay, and the last one is my stop loss on the knock to the reversal bar. You sent me this Wednesday, so I don't see the swing low. You said below the swing low. It must be underneath this and you would have got taken out, because there is no other swing low. That's engulfing. That's engulfing. There's no swing low. It's certainly market turned around and you've got a reversal bar now. You might have been taken out of that, but I don't see a swing low unless you're talking down here, which is where your stop would have been in the first place. Anyway, did that get to the 2? Got to the 1.618. Yeah. Had you used 2 consecutive buyer bars? Where's 2 consecutive buyer bars? And that'll be line ball buy bar, but maybe underneath that you might have called that a test bar off the 1.618. Oh, excuse me. Yeah. Okay. Well, the trade's over either, no matter which way you look at it. Get going, son. Move trade on EuroCAD pending EP at 42 with a stop at 44. Stop loss is wide, but target is better than 1.5 to reach. Yeah. I went into the trade a couple of days ago myself. I moved my stop after 2 seller bars to just above these 2 lows here, which is effectively halving my risk. My stop was originally above 44. It's now 42.75. So I've halved my risk. I've still got a 0.5% risk on it. But we should be looking at this in terms of I think you said 1.5. I thought it was a bit better than that. I thought mine was closer to 2. Target of the 1.61, not just on the other side of 1.618. But if we have a look at that's this area here, where I think we might find some support. So um, the you're going for the 1.618. I think that's better than 1.5. I thought it was closer to 2. I've moved my stop, but you can. You're looking at. Yeah, I think it was 220 pips I was risking, or 200 pips. Maybe it is only 1.5. No, it's 2. Yeah, it's 200 pip risk and 400 pip target was what I had. Waiting for confirmations on the Aussie Kiwi, Aussie Yen, Aussie Yen. Yeah, it's again. I went in at above this low test bar, aggressive entry. Moved my stop to break even. Cause I saw yesterday is coming back and testing support and rallying off that. But you didn't get in. You've only got one buy bar. Well, you might look at it now, but on a shorter time frame. Euro Aussie is setting up okay. This came in on Wednesday, remember, guys, but we know now that it's not. It's he then goes on to say I prefer the Euro CAD. I feel more comfortable with the CAD export story into the US economy than the Aussie export story to China. Yeah, well, that's a fair call. So you can see the Euro CAD is doing a lot better than the Euro Aussie. Euro Kiwi, you finally mentioned, rejected the short off the 200. Okay, this one here, fair enough. The last cycle off the 50 produced a higher high. Mm. Yeah, might be cycling higher. It's a little too messy for me to see or tell. And finally, looking at the Rand long off the 50 on the 4 hour. I'll close the Rand down, but I think that was the one that we were looking at before, which is what I suggested. So I like the way you're thinking, Matt. Yeah, looking at the Rand off the 4 hour. So perhaps you took that and it should be working for you. What's this? Oh, this is your Euro CAD. Okay. Yep. Yeah, that's all good. Okay. That's pretty much all I'm looking at the moment. I've got this 1 hour going. The euro dollar I see is, we do have divergence here, and there is potential for it to have a bit of a pullback, and it's likely to have a pullback because it's just been overdone so much. But it's under a lot of pressure and could easily head down to these levels here, 125 area, 127. Which would be good for their economy, but there's divergence. We are getting back up into the 50s, so if it gets up here and your momentum's above the 50 and you get a sell signal, I think that'd be a good opportunity to take that. Pound, obviously, this is a bounce on this sell-off. Was the Scottish vote coming into looking like that they're going to be independent. And here we have the bounce where they go, well, perhaps that's not the best idea. We've got the 50 crossing the 200. I'm still leaning towards being a bullish, prefer to be bullish the pound than bearish. But if we get a sell signal up here off these previous lows, and we've got the 50 under the 200 and momentum's in 80, and there's a good chance that this could become a bear market, and we'll be looking at Perhaps coming back under 63 and heading towards into the 50s. With the stronger US dollar, there's every potential that could happen. So I'm sort of sitting on the fence with the pound and waiting for that to what's the best opportunity there. The loonie I do see as stronger and continuing to be stronger, but against the greenback I think they probably struggle. There's a potential looking at it as a range, but we've got this where's that weekly long-term trend thing happening. Yeah, I just don't see enough of it, or any ease in it. There is a potential going, oh well, we've got some cyclicity here, higher highs and higher lows, and yeah, you could potentially you could look at that and trade it, and I wouldn't have a problem. Personally, I'd stay away from this and look at the CAD against other pairs such as the CAD Swiss, or even the Aussie CAD. The Kiwi was a bit of divergence here. Um, they do have their elections tomorrow or over the weekend. Does seem to be overcooked. I see more selling to come. Um, down into the mid 70s is where I expect this to get to. May not be doing it next week, but that's kind of where we're looking at it. Has bounced off the 200 on this quite a few times nicely, and we might have the daily phase 2 producing that, getting it back up into this area. The 84 area there, that could well be the case off the 200 before it then becomes a bear market again. Excuse me. So it's a little tough to tell. It's pretty hard to be buying this at the moment. And I wouldn't be selling it on the daily, but there might be a potential opportunity on the 4 hour. Well, there you go. Looking at the 4 hour, you might get a reasonable trade on it. And this one is no stopping it. You can't jump on it. You can't sell it. And there's little cyclicity even in the shorter time. Oh, it's there, but it just took off later in the week. Yeah, that's where the hourly came back. But it took off. It went sideways and took off again. It's going sideways again. So it's hard to trade that one. When it gets a fundamental B in its bonnet, there's just no stopping it. You get action like that. Certainly won't be selling that one. So that's about it for the day, guys. You got any questions? You're still here with me? Yeah, cool. Yeah, thought I'd lost you all for a second. So you got any other no questions? No. Well, you'll have a lovely weekend. There's no webinar until Monday week. Next week I'll be in Sydney doing the courses, so there won't be any webinars next week. So I'll be back again on Monday. I think that's the 29th or something. But I will have access to emails, so if you need me or you've got any questions, just shoot me an email, and I'll respond to you in that forum. Otherwise, you guys have a lovely weekend, and I shall talk talk to you next week. Will the prop be on webinar? The prop courses, yeah, they'll be on webinar, but they won't be recorded like this one is. But they'll certainly be, you'll be able to log in. And if you're, you should still have access if you're a platinum member. And if you don't have the access codes, then email Danielle or Katie at the office. Yep. Okay. Alright, guys. Enjoy the sun, or is it sunny? I don't know where you're at, but yeah, have a good one. Oh, what are we? The finals are on tonight. Got the Swans and I don't know who else. I don't follow that sport, but yeah. Enjoy whatever it is you do in your time off. Get away from the screens. Thanks, guys.